Morning, Matt.
Steve, good morning. You are live part of the show today.
Oh, look at that.
Notice I didn't say you were on the market open, so you couldn't say anything smart.
See, I see that. I see that.
Yeah, markets are green. Nvidia's a little red. We haven't talked in a couple days on the show, so yeah, give me your broad thoughts. What do you think's going on in this market?
I actually just bought more Nvidia about 1 minute ago.
Okay, so you're bullish.
Hard not to be.
Why do you think Nvidia's red but the market's up?
I don't know. Don't really care.
It's funny because we were green in the pre-markets. We were, 124, and then, like always, little tank as soon as the market opens.
Well, we got the big conference coming up, so I'm just trying to get more shares before the conference.
Well, you and a lot of other people are doing that in the pre-market. Okay, so the interview came out with Besant over the weekend about how he said stock market corrections are healthy and that we need corrections in order to just not have a lot of fat and glut in the system. What is your kind of take on that? And do you think we still need to get some pain in the system?
So I don't know who you're talking about, but corrections are normal. And look, there's a lot of leverage in the market, so things are going to shake out.
Wait, you don't know who Scott Besant is?
It doesn't ring a bell.
He's the Treasury Secretary.
Doesn't ring a bell, Matt.
Okay. Well, anyway.
I'm messing with you.
Okay, good. I was just like, what? That's
No, I mean, look, there's a lot of leverage in the market, and it's not just with individuals. There's a lot of funds that use leverage, and while I'm a fan of some of them, I'm not a fan of others. And when you have more leverage in the market, there's, in my opinion, less liquidity. So I think it makes it a little bit more volatile, but to me, nothing's really changed. I mean, unless the biggest companies, and even when I say the biggest companies, I'm not just saying the Mag 7, but more broad, down to Coca-Cola and everything else. If you see an overwhelming amount of companies, S&P 500, start re-rating their guidance lower for the year, then I would start to worry. But as long as S&P 500 guidance is in the same area, I'm not too concerned about the market this year. I'm really not.
Okay, so I know you say you're not concerned, but then you get the Trump administration that are telling us we have too much government spending, we need to get a lot of it out of the system. I guess my question is, how can stocks go green if the government is hell-bent on not crashing the market, but getting enough spending out of the system where the byproduct might be that the market takes a breather?
You got to look at where that spending is going to. I mean, once again, if these companies are not lowering their guidance, I'm not too worried about it. We got to see what Q1 brings. Q1's right around the corner. I mean, it's almost April.
It is almost April, right? Like, this year has been moving by quick.
Let's see how Q1 earnings come in. Let's see if guidance for 2025 changes. Because if guidance doesn't change, there's a lot of overreacting going on. If guidance changes, then it's something to worry about. But you got to remember something. People are making long-term decisions every other minute because there's a new data point that comes out every other minute with how fast information flows now. But what does not flow is guidance from these companies. And that's what's going to drive the market ultimately. Everything else is short-term fluctuations. So we also have a big FOMC meeting coming up, and I want to see if Powell keeps to his hawkish stance or not.
Well, we know we're not getting a cut on
it's a 98% chance it stays the same.
Yeah, so if we're not getting a cut,
to CMC.
Yeah, so if we're not getting a cut, the question is going to be, like you said, exactly, what is Powell's stance, hawkish or dovish, on the labor market? If we see weakness in inflation in general, do you expect him to signal that May is more likely to get a cut?
Well, CMG Group is expecting June is the most likely where we get our first cut, and I don't think it matters whether it's May or June. I think that they should have cut already. I think they should definitely cut this week. They're not going to, most likely. But the inflation mandate, so they have a dual mandate. And I've always gotten in arguments with people about this because I think maximum employment is more important than price stability. Because to me, whether CPI is 2%, 3%, or 3.5%, is not more important than maximum employment and people having jobs, because you want people to be employed. You don't want people not being employed. And I think the idea of paying 102 versus 103 for something, whether it's groceries or different types of goods or services, doesn't really matter. It is more detrimental to the system when you have more people unemployed. So the Fed needs to change their stance and start looking at maximum employment. And when you have the government, this isn't the first time we've gone through this. Clinton cut hundreds of thousands of jobs from the federal side during his presidency. And you know what? We need to make a business environment where businesses can borrow to expand, or entrepreneurs have an avenue to borrow to start businesses. And we need to start looking at maximum employment rather than living and dying by a decimal point on CPI.
Do you believe in this idea that as we get more rate cuts, as you said, right, business owners, small entrepreneurs, et cetera, have a better cost of borrowing capital, but it kind of creates a cushion for stocks, even if the economy is slowing down. If we do get some cuts, although growth may slow down, at least companies don't have to worry about higher rates to finance capital, which could keep stock prices relatively tame.
I'm less concerned about the market at that point rather than the well-being of the country. And look, a lower rate environment is not bad. It's a good thing. The biggest companies can refinance debt at lower rates and improve margins. The cost of capital comes down. You have less fears about businesses not being able to pay back debt. You have less worries about liquidity in the real estate market. You also have an environment where businesses can expand if they had growth plans on hold. And you have an environment where it's lucrative to try to start a business. Right. So I think it's too many benefits for the very few bear cases that somebody could come up with it about, which is ramping inflation, which once again, if inflation goes from 2.8% to 3.8%, I don't think it really matters that much overall in the grand scheme of things if more people have jobs.
Retail sales data came in lower than expected. Do you think there's anything to that, or just continuing slow down?
No, why would we be worried about that? You just came off the holiday season. It's not going to be, doesn't matter. Big thing is FOMC this week.
Okay, well then let's talk about another company that we both have love for, which is Palantir. William Blair reiterated a market performance on Palantir this morning. They said their partnership with Databricks signals an expanding AI ecosystem. Loop Capital reiterated their buy, even though they took their price target from 140 to 125. And then obviously I was at AIPCon. I got to interview tens of different customers. It looks like they signed almost 20 deals within the past 48 hours. What is your take currently on the commercial momentum versus the current valuation?
My take on the momentum has not changed. It's incredible. I don't think we've ever seen a company do this before. That is not a consumer-facing company. I mean, this company, Palantir, is not living and dying with people spending $100 or $150 with them to buy a jersey from Fanatics or AirBuds or whatever product you want to think of, Nike shoes. I mean, this is a company that I've said from the beginning has the potential to be the second most important software company in the world behind Microsoft. So I'm just seeing more evidence that that can occur, which is amazing. I do not like the valuation. I still think the valuation's high. And while it has been rebounding a little bit, I think it's going to be very hard for them to get into the $100 range. I think Q1 is going to be incredibly important for them. If they don't come out swinging and really blow it out of the water, I think it's just going to kind of go sideways for a while. I don't think that we're necessarily going to see 50 or 60, but I could definitely see it consolidating between 70 and 90 until the fundamentals catch up to the valuation.
I think it's a fair take. I don't think there's anything crazy in that. I think it's very fair. Yeah, I would agree. I mean, look, a lot of the commercial partnerships that they released over the past couple of days, they're
huge,
and they're diverse. You know, one's a healthcare company.
Qualcomm is the one that people are sleeping on.
Yeah, and I have to go deeper into that. But Qualcomm, that's a big name. It's a very big company.
I may have an article about Qualcomm coming out tomorrow.
Very nice. We will make sure to plug that article. Speaking of articles, you put out a new one about Block that I'm linking right here in the chat. Your 30-second pitch for why Block is cheap.
It is so cheap, it's crazy. I mean, I don't have it in front of me, but if you actually go into the article and read it, I think I make a really good argument about why it's very undervalued. And if you look at what they've done to profitability, what they've done with cash from operations, and what the analysts are expecting going forward, and the potential revenue segments going forward, the buy now, pay later being integrated into Cash App, I think there's a lot of things to be excited about. This is a company that has double-digit percentage-wise EPS growth on the horizon over the next 3 years. And you're getting it for under 14 times this year's earnings. If I remember correctly, the multiples, it is very inexpensive. They have a lot of cash on hand versus debt. And it's turned the corner. It's no longer a company. While I think the stock-based compensation is crazy, it's no longer a company that is paying more in stock-based compensation than the profitability that they're generating. And in the new crypto environment, we could, with real regulation and laws, I think you could see a potential for Cash App to include other currencies other than Bitcoin. And I think there's a lot of potential for it.
Yeah, so I still disagree with this thesis. I'm going to read your article more in depth and try to get an understanding of it.
It's a numbers game. It has no, I don't use the product. I can care less about the product. But at the end of the day, the valuation doesn't make sense. This is now a broken stock, not a broken company. Whereas before, I would have argued it's a broken company rather than a broken stock.
That's fair. Valuation-wise, there's nothing. I mean, there's just math, right? Your analysis.
This is strictly a valuation play. This is strictly, you know what? It has gotten too cheap for the profitability that it's generating. It is buying back shares. This is a company that's still growing its revenue. I think they grew their revenue by $2.5 billion last year, and they're turning the corner. I just think a couple of good earnings reports, they're going to be back to close to $100 a share. Don't forget, this is a company that's gone down 40 or 50% in the past month or so.
Okay, speaking of buybacks, Apple 213. Do you like that or no?
Yeah, I love it.
Would you buy 213 or no?
I mean, I can't say I'd buy it because I just bought Nvidia instead of Apple. Even though I'm actually holding Apple in my hand ready to take a bite out of it, but I'm holding off because I'm honest with you. Apple is one of those companies where it does, to me, and I hate saying this, but it doesn't matter if it's 213, 226, 205. I don't care. I think it's something you just buy and hold. It's more of a technology utility at this point than anything else. And I just think it's going to gradually get bigger. Huge install base. People aren't getting rid of their iPhones or tablets. They're not going to Galaxy the same way that people are not going from Samsung to Apple. And the install base is just huge. I think that they're going to figure out their AI assistant. When you really look at what Grok is doing or what ChatGPT is doing, I'm sorry, there's no way that you don't have a real option from Apple that is not going into one of these apps that's just built into the phone within the next year or so.
Wait, hold on. You think Apple's going to make their own large language model?
I don't know what they're going to do. I don't know if they're going to piggyback off somebody else or make their own, but you can't tell me that they're not going to at least integrate something to make Siri on steroids.
Well, they already said they were going to do that, but it got delayed, which is why the analyst downgraded them.
I'm not a bear on Apple, and I haven't been. And look, I've been right the whole time on Apple. Wait, hold on.
What do you mean right?
So not from your Vision Pro, I will give you credit that looks like it's going to be a bust. But as far as Apple price point, since I've been writing articles about them, there's been a lot of people that have been very bearish about Apple, and ultimately I've been right on Apple.
I mean, yeah, so like since the past 5 years, if you've been bullish Apple, you've been right. But in terms of them actually putting up growth, I don't think anyone's been right on that. because they haven't.
But they put up EPS growth, and that's what I care about.
Okay.
They don't put up revenue growth.
Yeah, they put up a lot of buyback growth. I'll give you that. That's
$100 billion a year in buybacks. I mean, but that's the thing. How does somebody get bearish on a company that's making $100 billion or $90 billion a year in profit? It's hard to be bearish on that.
No, it's very easy to be bearish on that. If they're not growing and that's the only thing they have going for them, yeah, and the valuation is trading at 40 times, like it's not hard to be bearish on that at all.
It's hard to be bearish on that when you got Costco trading where it's trading.
Yeah, I agree. Costco's overvalued, but that doesn't mean Apple's not overvalued. So,
but I will tell you that I think Alphabet is so cheap, it's disgusting right now.
I agree. So I think you would buy Google over Apple any day of the week.
If you didn't have the Nvidia conference coming up, I'd be buying Alphabet today, not Nvidia.
Yeah, I agree. I bought more Google last week. I want to buy more. I just honestly, the growth of YouTube to me.
You know what I meant? This is for you. I can't resist.
Oh my God! Did you just?
I just took a bite out of that.
Yeah, I could tell. You didn't have to explain it. I got it. Well, it's a nice crunchy bite. But I'm more of a banana guy. That's I'm very appealing like that. So anyway, I feel YouTube's growth, given I'm a creator on the platform and how much I'm seeing them introduce new features. I just feel like that in and of itself is my thesis on Google, outside of all the other Waymo robotic stuff they're doing that the market is not priced in.
How about this thesis? Companies, the last thing that goes is their advertising budget, because that's how they reach current and future customers. That's the last thing to get cut.
Yeah.
There's no better place to advertise than Meta platforms or Alphabet, whether it is through search or YouTube. These are the biggest searched platforms. Those are the last things to go, and ChatGPT has not cannibalized search, and people need to understand that advertising is the last thing to go.
Yeah, I agree. And I think that same thing for Meta. Are you buying Meta here at 600 or no?
No, Meta's probably my largest position. I don't really need more of it.
And I'm assuming you're definitely not buying Tesla at 240.
No.
But so it hit 215. It bottomed out last week at 215. Do you think we revisit that?
Oh, don't say it bottomed out.
Well, at least for the week it bottomed out. Do you think we revisit that or no?
Yes. I was talking to one of my long-term buddies on my ride into the city this morning, and look, I'll tell you what I told him. I don't like discussing politics. I would rather stay away from that. But in this case, I'm willing to discuss it. And I think that Elon is potentially doing more harm to Tesla shareholders through what he is doing publicly than others think. And when you really think about it, his base was not people on the right to buy cars, arguably. And I think
But what if he's developing a new base?
We don't know if he is or he isn't. But even if he is and it's switching, I don't like it because I like the Michael Jordan approach. Everybody buys sneakers. Everybody buys cars. I just think that from a shareholder perspective, when you alienate a group of people, it's not good for business. And I am worried that is going to spill over and their auto sales are really going to diminish. I'm very worried about that. And I will blow holes in the thesis all day long. I'll debate anybody who wants to debate about autonomous. I don't care. This is not the Tesla. When full self-driving comes out, this is not going to be $1 trillion business anytime soon. You can't think stop driving because Tesla has a ride-hailing system. You have Uber and Lyft, which are ride-hailing systems, and people still buy cars to drive.
So hold on. Let me give you a counterpoint. Let me give you a counterpoint.
The entire taxi market is expected to be $430 billion in 2029. You're telling me Tesla's going to get 100% of it? I'm not buying it.
Okay, so let's say Tesla doesn't get 100%, but if everyone's getting bearish on the same thesis that Elon's hurting the brand, isn't that a lot of groupthink? And wouldn't you go the opposite direction if everyone's thinking Elon's ruining the brand?
I'd have to see numbers.
No, like
first
literally the
before I
entire
do.
mainstream narrative is Elon screwing the brand. Like, isn't that the time to be a little contrarian and say maybe it's not fully?
Not right now. I need to see at least 2 quarters worth of data to take a contrarian view on that, because I want to see auto sales. I want to see where they're coming in. I want to see if they're going down or not, or even if they're growing. I mean, I'm worried that he is doing a lot of damage to the brand, and I just don't think that ride hailing is the answer. I never did. I'm not changing my thesis on that until I get real data points that prove me wrong, and I'd be happy to change my stance. But people are not getting rid. You've had Uber, you've had Lyft, you've had Yellow Cab. People are not getting cars to use those services. And to think that because Tesla comes out with a ride-hailing thing, that people are just going to stop driving is crazy. People actually like driving. People actually like having their own cars.
Okay, hold on. Did you hear my story from last week?
And when autonomous comes out, people will like having their own car and not driving it, but being in their own car.
I don't think you heard my story from last week.
I did not hear your story.
I had a Lyft. I get into the Lyft.
Oh, you told me this on the phone.
The dude's Lyft app's not working, and I freaking have to give him my phone to take me to my destination. And in those 10 minutes, I cannot tell you how bored I was looking outside the window without having my phone. So the point is, a robotaxi would never have that issue. The phone wouldn't stop working in a robotaxi because it's all based on like the amount of security and privacy and just like overall feeling.
Right, but that's an anomaly that happens.
No, I know it's an anomaly that the situation happens, but I think in general people would just enjoy not being stuck with a driver in the car.
Okay, but Tesla's not going to be the only one with that technology. And you could very well have Uber buy Teslas and put it on their network. All I'm saying is I don't think Tesla's going to get enough of the market share from this to really make the bullish arguments come true that some people are saying. I think the future of Tesla lives and dies with robotics.
Look, I do agree with you there. Waymo already launched in Austin, and Elon's launching in June, but we don't know how good the prices are going to be relative to Uber in June. And if it's not, like if it's only $1 cheaper, like, yeah, you're not going to get a lot of people switching. That's fair. So I think they need to prove in June that they have a successful robotaxi launch to set the precedent for the next cities they're launching in. But I guess we're gonna have to see. I agree with you as well. Auto sales, I think Q1 are gonna be really bad. There's no doubt of that. And then, as you said, it kind of comes back to Optimus or not.
It's gonna live and die with Optimus. That's what's gonna happen.
Yeah, but I also do think everyone's getting so bearish that, maybe there is a contrarian argument here to be more bullish Tesla. But I agree, like there's a reason for people to be bearish. It's not like it's dumbfounded bearishness. So I guess we'll find out in the coming months how.
Think about this. Everybody's bearish right now. Well, a lot of people are bearish right now. What happens if they miss Q1 earnings?
Oh, they're gonna miss Q1. There's no way they're gonna. Like, I don't see them beating Q1 or even making it. I mean, they missed last earnings too.
Think about this. What if it's a big mess? And what if guidance for Q2 isn't that great?
Yeah, that could be ugly.
What happens then? It's not like this has a lot of momentum to the upside with a lot of people being bullish, where maybe it gets a little bit of a pass and only goes down 5%. I mean, with this much momentum to the downside, this many people thinking the same thing about his political stance, and if they really do miss, and then it isn't great guidance, this could have a lot of momentum to under 200.
I don't disagree with that at all. I don't disagree. I just think that's a mainstream narrative that everyone's accepting. But yes, there could absolutely be a world where that plays out. And
in all seriousness, why take the risk and buy Tesla here when you can buy Nvidia or Alphabet? Because people aren't going in and buying 10 different stocks. They're buying 1 or 2 companies most likely. So you want to get the most bang for your buck. Nobody can give me, at least for the next year or two, a reason to buy Tesla instead of Nvidia or Alphabet. You want to make a 10-year bet? I think this is a very good time to start nibbling on Tesla and keep buying if it goes down. if you have a 10-year time horizon. I think it's an amazing opportunity.
But if it's a 2-year time horizon, Nvidia and Google,
I don't think that a 1 to 2 year time horizon is worth it. I mean, I just.
What do you think of Mark Kelly ditching his Tesla to buy a Chevy over the weekend?
Whatever. That stuff doesn't resonate with me.
It goes to your point, though, that people are, publicly bashing the brand and all that stuff.
Yeah, look, I would rather it not happen because it's negative publicity, and I'm not one that believes all publicity is good publicity. First it was Sheryl Crow, then it was him. I mean, it's just, this all could have been avoided. And it's funny that the breaking point was him not getting invited to the EV summit. I just feel like it's so funny that was the breaking point. But look, I'm not happy with how, as a shareholder, I'm just not happy with how things are going. I mean, look, you have serious concerns about who's running the company, what decisions are being made, where's his focus. I mean, you have serious concerns about that.
Do you think he's going to be on the earnings call?
He better be on the earnings call.
I would say 70-30. 70% he makes it, 30. I'm putting a 30% chance he doesn't.
He better be on the earnings call, and he better say something to the extent of robots are coming this year.
Well, they did say by the end of 2025, there's a shot they could start shipping them. So they said that last quarter.
He better say that they're fucking going to be shipped. He better say something, because I got to tell you, don't let this live and die with autos right now. Yeah. Especially if the economy is slowing.
That's a fair point. I mean,
Atlanta Fed thinks that negative 2.4% GDP growth Q1. So don't let this live and die with auto sales in an economy that's slowing.
Okay, last question for you, Steve. I don't know if you saw this headline, but Buffett is thinking of selling some of their real estate business.
Yeah, I saw it.
Any thoughts on that, or you don't care?
It doesn't matter to me.
He has been right, though, right? He stayed in cash for the past 3 months, $300 billion. Like, he's been right.
Okay.
I mean, being in cash was good over the past 3 months.
Okay.
I'm just saying, like, Buffett got it right again.
Okay. I mean,
I know you don't like him, but still.
No, it's not that I don't like him. The guy has done an amazing job. The guy is an icon, and there's not enough good things to say about him. It annoys me when people say that he's the greatest investor of all time. It really irks me.
Well, who's the GOAT if it's not Buffett?
It's definitely not Buffett.
Well,
forget how much money Berkshire has or how much money he has. That doesn't make him the GOAT. Percentages make GOATs.
Well, he's up like 50,000% since inception. Like,
think about how long he's been in the market, and he was investing think about this. He bought Coca-Cola when in the 70s or the 60s and just sat on it and let the dividends compound. If you have a long time horizon like that and you got into the market at that time, of course you're going to have those types of gains. Of course. But think about it. He hasn't been in anything innovative. He hasn't called anything that nobody else called. And he has missed every tech company there is.
But does that really define if you're the GOAT or not? If you still outperform, like, I don't know.
I'm not saying the guy doesn't outperform. The guy does a great job. It just irks me when people say, well, Buffett's not invested in that. Okay, so you wouldn't have wanted to invest in Amazon? Alphabet? Any of those?
Yeah, I agree.
Really?
That argument's not the best argument. I get it.
Really? Like, you didn't want to invest in Nvidia? I mean, Palantir? Even though I think valuation is crazy. Like, he doesn't venture out of his comfort zone, and he doesn't have to. But I don't think that makes him the greatest investor of all time. I think that there are other people that are way more interesting to follow in what they're investing in because there's more upside in those types of companies.
Okay, so actual last question for you in the chat. You guys can say your answer as well. I asked this last week, but curious what people think. If he had to buy one company right now, there's one stock I have in mind, but what is the most Buffett-esque undervalued name that you think he would take a position in?
I mean, Buffett-esque undervalued. I think Buffett consolidates more insurance and buys another insurance company or energy company at this point. And it would make sense for him to buy Oxy. I don't know.
But Oxy is too easy of an answer because he's already like what's a give me a little something spicy.
Nothing spicy, but I mean, look, given what is going to happen with energy, the guy should go buy freaking Enterprise Price Partners or Energy Transfer at Kinder Morgan. He should buy a full-blown pipeline company because in 2020, he bought 7,700 miles of pipe from Dominion. He already has a very large energy infrastructure platform through Berkshire Energy. So he should just bite the bullet and just freaking buy one of these MLPs or C Corps that has 100,000 miles of pipe, terminals, storage, and everything.
I don't hate that. I think that's a great answer. My answer would be PayPal.
I mean, talk about Visa should buy PayPal or Amex or somebody like that.
The buybacks alone, I think, has to get Buffett to be interested.
Dude, PayPal is so undervalued. It's disgusting.
Oh, Tanner did a podcast with Dan Dolev. I didn't watch the podcast, but the title is PayPal's the next.
I saw some of it. I saw the beginning of it where he was talking about PayPal.
Okay, I didn't watch it. Did he have a point about PayPal being the next Nvidia?
100%. Well, I mean, I don't know if it from his perspective of why he said it's the new Nvidia, it's because of the EPS growth going forward, and I do agree with him on that. But Nvidia has still more growth on the horizon, but PayPal is so hated right now. I think he's absolutely right, and it's the same thing that I've been saying about PayPal for a while. And I mean, PayPal is another one that's massively undervalued.
Yeah, I would agree. I think there's other opportunities, but 100% agree.
Massive one. So.
All right, good stuff. Thank you, Steve.
I'm going to finish my apple, and I'm going to go to some meetings, and then I'll talk to you later.
All right, Steve's Twitter right there in the chat. His Seeking Alpha is on his Twitter. You guys can check him out there. I'll talk to you later, Steve.
And leave comments on the Black article, and I'll respond.
Yep, you guys can comment on the Black article, and Steve will respond to all of them.
All right, later.
Later. Have a good one.